Hello and welcome to our ECB live event. We're just running into the ECB announcements, which should be coming in the next few minutes. Just in 5 minutes time, we're expecting that announcement. We're tracking what the euro is going to do. We're tracking European bond yields, but more specifically the euro and some of those indices like the DAX and the Euro Stocks. The Euro Stocks 50. So ECB coming right up. We're expecting 75 basis points of hikes. That's the consensus. They could go a bit more hawkish and go for 100 basis points. That would be very hawkish, and that would be euro positive. 75 basis points is not quite clear whether or not that's going to support the euro. It depends on what the sort of language is around the announcement. So we're looking at potentially them saying that inflation is high, more hikes are needed. Downside risks to the economy, but they could say that inflation needs tackling. Then they're going to go with more hikes, aggressively with more hikes, and that would be seen as pretty hawkish. They could go 100 basis points. They could go for 50 though. They could go for 50 and say that the path of economic growth is so poor that we need to actually ease off on the hikes. Now that seems unlikely, partly because the September projections from the ECB staffers were probably a little bit too optimistic on the growth front, and so they're still working off those, and so it doesn't seem that 50 basis points is likely, but it is possible. Though I think 75 basis points seems more likely. The real question marks for this meeting are around QT. Now, we don't think they're probably going to be talking about QT right now, probably indicating that it might be on the card. They might start talking about it next year. They've already said, Christine Lagarde, the president of the ECB, and others have said that they're going to wait until interest rates move up to the terminal rate. Now, we think that's somewhere slightly above the 1 to 2% natural range. So implying maybe 2.25% is where they'd like to get to. The market thinks they need to get to about 3. A 75 basis point hike today means that they've got another 75 roughly to go to get there, and that would be achieved with another hike in December, potentially one final one in February, and that seems to be the consensus right now. That's when they could start talking about QT, selling bonds, and that might happen in spring of next year, but I don't think they're going to get much in the way of an indication from Christine Lagarde today on that one. Also worried about excess liquidity in the banking system. That's meaning that the funding overnight repo operations become problematic for various financial institutions. It's all about the financial plumbing and the market. It's not really going to be too important in terms of the market reaction for the euro and stocks. It's more about the plumbing, as I say, but it would become a problem if they don't get it right. But expect some sort of adjustment to the TLTRO scheme in order to make banks repay those earlier and release more liquid assets into the system. And then the other thing is on that terminal rate, exactly where we think the terminal rate is going to get to, where they think it's going to get to. And that is as at the moment around, as I said, about 2% seems to be the consensus. Whether or not it needs to be a bit higher, we don't know, but there is obviously a lot of concerns and pressures swirling around with energy. Energy prices have come down a bit, and that's maybe a factor in why they don't think they need to go too high. So we're just shaping up for the release in 2 minutes time. We're just looking at the euro on the charts. It trades just above parity. It was touching $1.01 just earlier, but just came off that level. That was an area of resistance, which has bounced off. Elsewhere, we've obviously got Meta declining about 23% in the pre-market, so watch for that one. Tech stocks took a battering yesterday because of Alphabet and Microsoft. Facebook overnight reporting soft income, rising expenses, a major cash burn on the metaverse, and expects expenses to increase next year quite aggressively. So that's going to weigh on the tech sector. But the Dow's not doing too bad today because we think the older economy type names are doing a bit better. So we've had some good numbers out of MasterCard, we've had good numbers from Caterpillar, Merck, among others. So there's a bit of a push and pull in the market right now between tech, which is being beaten up hard, and some of the more cyclical parts of the economy. So ECB wise, so we're just looking at that announcement coming in the next few seconds. As I say, they're expecting 75 basis points of hikes. We're expecting them to say that the risks to the economy are to the downside. We expect the inflation is high, but more hikes are needed to bring medium-term back to target. And we think in terms of QT, they probably won't say anything. Christine Lagarde might in the press conference say that she's prepared to talk about it, or has been talking about it. And we're just looking for the release just coming out in the next few moments there. And I think it's, there we are. So we're up to 2%, so that's 75 basis points of hikes have come in. That's just gone across the flash there. So 75 basis points is what they went for. Looking for a reaction in the euro. Deposit rate facility, again, up to 1.5%, so 75 basis points there as well. And the marginal lending facility, 2.25% versus 1.5% previously. So again, 75 basis points across the three main bank rates, funding rates that they control. So that is just sending the euro. Not quite sure. Getting indecision in the euro right now. I think because we need to see what the commentary is in the release about the other aspects of the monetary policy decision. So if we just read it through. Today decided to raise the three key ECB interest rates by 75 basis points. The third major policy rate increase in a row. The Governing Council has made substantial progress in withdrawing monetary policy accommodation. The Governing Council took today's decision and expects to raise interest rates further to ensure the time and return of inflation to 2%. The Council will base its future policy rate path on the evolving outlook for inflation, taking a meeting-by-meeting approach. Still, inflation remains far too high. They say at 10%, no doubt, it is far too high. And they are guarding against the risk of a persistent upward shift in inflation expectations. So this is all about going hard, fast and early. I mean, way too late, but in their eyes, going early. Governing Council also decided to change terms and conditions of TLTRO, as we expected, to increase, to grease the wheels in the funding markets. And in order to align the remuneration of minimum reserves of credit institutions with the Eurosystem more closely with money market conditions, the Governing Council decided to set the remuneration of minimum reserves at the ECB's deposit rate facility. So changes to TLTRO and these deposit rate facilities, all about easing the sort of squeeze, this excess liquidity in the banking system. That means there's a shortage of liquid assets for institutions for their immediate funding purposes. That is what that's designed to do. Asset purchase program. Nothing on QT. They will continue to reinvest in full principal payments from maturing securities under APP. So that's a QE program is APP. And TLTRO, there we are. So nothing too surprising here from the ECB. I just get a question now. We do these lives. We try to do them once a week for traders, and it's usually around an event like the ECB. So just to give you a bit of a kind of a little bit of extra insight, if that's possible to do. So markets moving, euro just dipped a little bit, steady, very steady. I think this decision was well telegraphed in many ways, as we said, 75 basis points of hikes. The question will be in the press conference, which is coming up shortly, which is going to be the sort of commentary around the pace of future hikes and the prospect of QT. So that's the ECB decision. Like I say, look out for anything on QT. So and not just reinvesting principal payments from the APP program, but starting to sell bonds back into the market, and that is going to be the key question mark. I think we've got the answer on TLTRO in terms of that excess liquidity. So two remaining questions are: what does the ECB think the terminal rate? Where does the ECB think the terminal rate will be? Is it around that 2% still, or do they think it's maybe going to creep up? The other thing is QT. Have they discussed? Are they thinking about doing QT? Now we know the Bank of England faced trouble, not of its own making, perhaps, but certainly the prospect of selling gilts into the market was one of the factors after the mini budget that caused problems in the gilt market, and we wonder if the ECB is worried about causing stress in the European bond markets from a potential signal of QT. So euro is moving lower to a degree, and stock market, euro stocks, and as you'd expect, with the euro moving a little bit lower, European stock market is moving a bit higher. So slightly easier, dovish, easier policy is euro negative, and it's positive for stocks. And likewise, if you get a hawkish or tighter stance on the monetary policy side, that's good for the euro, not so good for stocks in the European economy. But no signs of a pivot at all from the European Central Bank, unlike what we've been seeing the narrative lately from the Fed, or not from the Fed, but what the market is reading into the Fed what the Fed will do, and the market is pinning its hopes on a pivot. That is not the place where the ECB is right now, but we do have a lot happening next week with the Federal Reserve, the Bank of England, and the RBA all in action. So lots of central banks coming up next week. But aside from the central banks, we've got a host of earnings and this big tech wreckage that we're seeing with Meta rippling through the markets. It seems unlikely that we won't get more volatility when Apple and Amazon report tonight. So lots happening out there, and we'll try and do another one of these lives next week around one of those central bank decisions. I think possibly the Bank of England would be a good one to cover, seeing there's just so much uncertainty about what the bank is able to do, or is willing to do, and what it's thinking about in terms of selling gilts. So just to recap on the ECB, another big bumper hike, fully expected. And stocks is trading marginally higher, the euro trading marginally lower, but really it's all going to be all about Christine Lagarde in the press conference, which is coming up shortly. You'll find that on the platform on X-Ray. We'll be streaming that live, so you can find it there. Thanks for watching.